The gold price fell back on Tuesday, down $10 from yesterday's one-week high, but holding 1.1% above last Friday's five-week closing low as global stock markets rose despite worsening geopolitical tensions between the West and the rest, driving further central bank gold buying at the precious metal's recent all-time high prices. Crude oil ignored geopolitics and held near two-month lows, while silver prices touched a seven-session high above $27.50 per troy ounce before edging back 20 cents. With the London Bullion Market closed Monday for the UK's Maybank holiday, the price of wholesale bullion yesterday touched $2,332 per troy ounce, a level briefly reached but then lost following last Wednesday's promise of higher-for-longer interest rates from the US Federal Reserve. The Fed, only, confirmed what the markets had already worked out, says the latest weekly note from analysts SFA, Oxford, for German bullion refiners Heraeus. Gold's recent price retreat also means that it is no longer overbought, and although speculative positioning in COMEX futures has climbed with the price, it is still well short of levels seen from 2020 to 2022. June and July will leave U.S. interest rates at the two-decade highs set by the Fed last summer, according to market consensus. But fewer than 1 in 3 bets on September's Fed meeting now see the U.S. central bank failing to cut its key interest rate that month, down from more than 1 in 2 this time last week. Longer-term borrowing costs also continued to retreat on Tuesday, with the yield on 10-year U.S. Treasury bonds falling to the lowest in 4 weeks at 4.45% per annum, a quarter point below late April's 5-month highs. With the major monetary policymakers out of the way, says a look ahead from Swiss bullion refining and finance group MKS PAMP, pointing to the recent no-change decisions from the US Fed, European Central Bank, and Bank of Japan. Other central banks' divergence will be on full display this week. Australia's RBA is under pressure to hike, while the UK's Bank of England is expected to hold and inform on its likely path. Mexico should pause ahead of election, and Sweden's Riksbank is expected to cut. US macro risk also goes quiet, MKS adds, with few major data points due from the world's largest economy after last week's shock stagflation figures from the manufacturing and services sector or the shock slowdown in non-farm payrolls growth reported last Friday. Back in gold bullion, official data today said that the People's Bank of China added another 2 tons of gold to its reserves in April, the lowest monthly increase since they resumed reporting additions in November 2022, as analyst Krishan Gopal of the Mining Industry's World Gold Council notes. The National Bank of Poland bought more than that on Gopal's analysis, adding 3.5 tons to the 1.2 tons already bought at then-record prices in March, having previously suspended new purchases following November's election victory by Donald Tusk, opponent of the right-wing PIS party, which appointed NBP Governor Adam Glapiński. The neighbouring Czech National Bank also bought gold amid April's fresh all-time price highs, adding 1 ton in what is now a 14-month programme. With the central bank of world number 3 gold mining producer Russia not reporting its bullion reserves since the invasion of Ukraine in early 2022, Vladimir Putin was today sworn in for a 5th term as president in Moscow, while Kyiv's intelligence services claim to have thwarted the latest attempt by the Kremlin to assassinate Volodymyr Zelensky. The Israeli Defense Force, meanwhile, launched a limited operation on the city of Rafah in southern Gaza, now home to perhaps 1.4 million refugees, defying a call from US President Biden to focus on ceasefire talks in Cairo and sabotaging global efforts to end the conflict according to the terrorist Hamas group's backers in Tehran's dictatorship. Please like this video and subscribe to our channel.